You mentioned the new Capital Investment Entrant Scheme.
Yes.
And we take a look at the Singapore scheme, and actually they are very attractive. In terms of the investment threshold, they need to invest at least $14 million, and even their next generation of the investors can qualify for that scheme. What do you have in mind? How can we surpass Singapore?
Well, I have tasked my colleagues. Actually, this is a cross-bureau effort to come up with a concrete proposal, more detailed proposal. Number one, the amount required of the investment immigrant, if I may use that word, would be much higher than 14 million Hong Kong dollar. Well, we need to attract not everyone, but if the top 5% wealthy people want to come, would be huge volume. So we have to define our market wisely. And also this time around, we specifically said that their investment in properties would not be included. So that this money partly will go to other financial assets. But the reason for a cross-bureau task force to look at it is to come up with certain requirements, to require these people to set aside some of the money to invest into sectors that we want to promote. Say, for example, innovation and technology, startups. Well, of course, there may be risks, but there may also be returns. But that would be good for our economic development. So we need to come up with a plan to channel some of this money to this direction. At the end of the day, over the past 6-7 years, we have devoted over 160 billion Hong Kong dollar to develop innovation and technology. Yes, we are seeing a more vibrant sector. But we could not do all this with government resources alone. We need to leverage private sector capital. That's why we launched the different funds you mentioned, the Hong Kong Growth Fund, GBA Fund, Tech Fund. But at the same time, for these people to come in, having the privilege to be our resident, make some contribution to our economy, not just money.